You are looking live at the Nasdaq, a daily chart. And what we see here is the head and shoulders pattern, which the shorts or the bears had warned us about. The Nasdaq is going to crash and burn because of this head and shoulders pattern. And of course, it did. It fell, in the month of September, August and September, it fell from peak to trough. It fell 11.5%. And here you can see the Gumby shoulder on the way down. But what happened now is that it made this double bottom pattern. It hit that bottom at 13,161. And then yesterday made a new low. You continued to make new lows, but made a new low on Wednesday. And I'm not calling this the bottom, but that is the most recent low of 12,963. And since then, yesterday it made a reversal, and today I've traded higher. So today's day two of an attempted rally, and starting Monday we can maybe have ourselves a little bit of a rally here. But anyway, that is your head and shoulders pattern. It looks like it kind of hit this low, and now it's trading back up. If you take a look at the weekly, the bulls can still point to their cup with handle pattern here. So whichever way you want to slice it, there's something for everyone here. Traded down to a moving average as well. But I don't like to call it tops or bottoms or anything like that. I'll never buy a bottom or sell a top, but I will say that this does look like a reversal here. And the problem is for the shorts or the bears that they want the market to go lower. It's just there's too many people who are short, with either through stock or through the options. Too many, the put call ratio. It's pretty obvious that there's a lot of negativity, and everybody. I even heard one person say that just buy SQQQ and ride it to 30. It's easy money. Well, that my ears perk up when I hear that type of stuff, because nothing's ever there are rarely things that are easy in the market, and right now it's at $20, so that would be a 50% move. I kind of doubt that's going to happen, but anything can happen in the stock market. So I just try to be flexible and open-minded. And yesterday we got this low and then the reversal higher, and today it followed through with 108% advancement, 0.83% move, and it closed at 13,201. The volume the last couple of days, above the prior session there. So maybe the sellers are receding and abating. But I don't trade the Nasdaq, I don't trade the SPY, I don't trade Dow. I trade stocks, and I'm going to take a look at the Magnificent Seven. I haven't done that. But this made a new low. This is Apple computers, made a new low with the index. They had the low of 171, and then on Wednesday made that low of 169. Today made another low of 167.62, and then bounced higher. So Apple's not out of the woods yet. You want to see, as the index makes lows, you don't want to see your stock making lows with the index. You want to see it showing strength. Microsoft made a low there yesterday and went lower today, and then bounced higher. Not much of a bounce here. I did want to point out, though, that NVDA, while the Nasdaq was making a new low, this thing did not. I think it came down about 409. Yeah. So it had the 403, it held, and you call that a retest. And now it's trading higher. I mean, it's at 430 now. So the shorts couldn't push it any lower. So it's probably going to go higher. This is Tesla. It made a new low with the index yesterday. Finished in the middle of the range yesterday, 55%, then had a nice rally today. So Tesla looks better. Google was the strongest one there for a while, but it sliced its 50 and then recaptured it today. So Google looks a little better. Amazon, no siree here. No soup for you. 123 was the low. So it continues to make new lows. So that's not good. Meta, mentioned this yesterday. They make an announcement and then it sells off like a sell the news type of event. And then what happens the next day? The buyers come in and pushed it up 2%. Back above 300, back above its 50 simple moving average. Yeah, so Meta's looking better than most. And once again, it didn't even come close to making a new low when the index did earlier in the week. like yesterday. Anyway, that's it for the Magnificent Seven. I just had to cover that. Stocks that are showing strength. I'm not going to start with coal today. I'm going to go to the electrical contracting manufacturer stocks. And Fabrinet, I've been showing this one like every day. It gapped higher, then pulled back to the 21, showing strength, a nice 5.5% move today. So that is one in the group that showed well. Jabel, this one had earnings, and that's a nice earnings gap. Anytime you get a 18% move with 450% above average daily volume, that is not to be ignored. And the other one that I want to show is CLS. This one gapped earlier, pulled back to the 21 and ramped higher, and then pulled back to the 21 and now is ramping higher again. So definite pattern there for CLS. The one I like, because my buddy is the CEO there, and since he's been back, he's been delivering real strong numbers here, but the stock hasn't really responded. Still in this consolidation pattern, the up-down volume is woefully low, 0.7. I like to see my stocks about 1.2, 1.3 or more. But Sanmina, going to keep my eye on it. Definitely a laggard now in this group. I just showed you some of the leaders, and I got to go to coal because the coal stocks are just ramping. They're out of control. This is AMR, blasted out of a base here, then pulled back to the moving average of 10, pulled back again, and they're finding support at this green line here, the 10, every time. Ramped higher, new high today at 265. I think I showed the coal stocks every day now. This is a consolidation pattern here, and then ramping higher. And this will change. These stocks will get hot for a while, and then in a couple days, weeks, or months, they'll sell off, and another group will take a lead. But for now, these ones are ramping. This is Consol Energy, CEIX, made another new high today. You could see this base here and the breakout and the ramp higher, pulled back to the 21, just like AMR. It only gives you these little chances here. Once the breakout happens, just these slight little pullbacks to moving averages, not much. This latest one came to the 21 and then blam. This one is really ripping. Warrior is another one. Whoa, what happened to this one today? It looks like it made a new high and then closed at the low of the day. That looks like an inverted hammer candle. I don't like that. Anyway, gapped higher on Wednesday. It looked like it was going to rally today. It was up to $53, closed at 51. That doesn't look too good, but you never know. I mean, the volume is coming in on this one. It is increasing. Yeah, that one still looks pretty good. Who cares? One day, anything can happen on one day. But you always like to see them close near the highs of the day. Anyway, as Mick Jagger saying, you can't always get what you want, you get what you need. Anyway, I'm going to go to the oil stocks. This was a hit and miss today. There was some making new highs, like New Park Resources. Any stock with resources in it has got to go higher. That's the new rule. New Park definitely making new highs. Typically, I don't even look at stocks under $10, but this one broke out and is trading higher. So just acknowledging that, observing the fish tank here. CRC, another one, California Resources. I got to go to the weekly on this one. Long period of consolidation, broke out, had a 3 weeks tight and a pullback to that 10-week line, and now is trading higher, up nearly 5% this week. So that one looks good. Another one, CNX is CNX Resources. Got to have the resources in there. And this one I should have on my ready list because of the long base here. The depth is 41%, which, but 63 weeks, that's a long time to base. A pullback to the 10-week line, and this week, now it's up nearly 7%. So that one might just be getting rolling. I would definitely write that ticker symbol down and dig into that one a little further. That looks pretty good to me. NRP, not NR, but NRP, Natural Resources. This is an energy coal stock. What am I doing here? I'm back to energy coal stocks. Yeah, this one's ramping higher. Oh, I know why I put this one in here, just because it was making new highs, but it's definitely not in the oil and gas. This is energy coal, and you can see the base here and the pullback to the 10-week line. Man, it's been up the last 3 weeks, up by 3.65% this week. I think I just wanted to put anything with resources in there. And LPG is another one that I have on my ready list. This is a Dorian, and this one, consolidated with a cup with handle, and now just pulling back to it's a moving average. It's moving a little slowly, but the base is real short, 7-week base here. Just definitely one to watch. That's in the oil and gas transportation pipeline stocks. Anyway, that's enough with the coal. That's enough for the oil and gas. I want to get to the retails. Many of the retail stocks have just been absolutely obliterated recently, like Target and Foot Locker and Dick's Sporting Goods and Crocs. They've just been hammered. Costco reported earnings on Tuesday night. Wednesday had the fake out here below the 50, and it went way below. I mean, it went down to 544 and then closed at 563. So nearly a $20 bounce off the lows here, ripped back through its 50 today, tacked on another $5. Yeah, Costco looks great to me. This is a nice consolidation period. With a stock like this, you really look at the weekly. Long period of consolidation here for Costco. 1.6 up down volume. So there's more buyers than sellers. It's got the fundamentals. I mean, it's really got everything you want. Little tiny yield that it pays. They should increase that. But anyway, Costco is a great long-term hold. ELF is one that I don't include it. People get on me, so I've got to include ELF. This one had this reversal candle, and this is what you look for in a reversal when it hits a low and then bounces and closes near the high of the session, forms that hammer candle. I think this was Friday when it pulled back a little bit on Friday, but it's been up every day this week. ELF looks good to me here, this little waterfall pattern. The only thing about ELF, I know it's sold off hard and, it's due for a base, but it's below its 50. These short-term moving averages are curling lower. So that'll change though. I mean, if the stock continues to trade higher, and it looks like it wants to. So watching ELF closely. CELH is different than ELF. People want to say it's the same as ELF, but it's not, because it didn't slice its 50 with volume and trade below it. I mean, right now it's right at the 50. It's battling there. When it closed, a tick below it. Okay, so you can see the difference between this stock. Yeah, the selling is heavy, and so that tells you that it's, I don't know. To me, it's like whoever wanted out got out. Whatever reason, doesn't matter. And now buyers step up. This one sliced its 50 well below its 50. It's still 9% below its 50, whereas CELH is right at its 50. And you can see ELF has not based in a long time, whereas CELH has just popped out of a base here in a flat base pattern. So that's the difference between those two. One more I want to look at in the retail space, I'm not going to look at all the losers, is Abercrombie and Fitch. This is why we say, don't ignore these big moves higher. This power earnings gap, 23% move. It traded higher, then pulled back to the 21. And, we've seen this a lot with leading stocks or stronger stocks, pull back to a moving average, little bull wedge, and then ramp higher. This one's been going up every day this week. And Abercrombie and Fitch looks good. Yeah, nice 10% move this week. So that one looks good. Anyway, enough with those stocks. I'm going to go just to random stocks that I like, that I'm just observing. This is Ferguson. They reported earnings earlier in the week, had a nice positive response here, and has been up 3 days in a row since this earnings break of what was it, up 4%. This is not a fast moving stock, but it is showing strength and volume coming in. It's in the same group, I believe, with Builder and STRL. Yeah, building. This one sliced its 50 and just kind of wallowing around here, this 120, forming a base. It's been, it needs to form a base. Its last base was this ascending base pattern, and it really ramped from 90 to 156. Now it's just forming a base. If you look on the weekly for Builder, yeah, this one's just biding its time. It's probably been about 6 or 7 weeks now. So give it some time. And the other one I did mention was STRL, the construction stock pulled back to its 50. So we'll see if it can find support there and bounce. Another one was Power Quanta Services. This one sliced its 50. This one really came in hard. But anyway, look for this one to rally back through its moving average or just base. A lot of big heavy selling coming in on that one. Okay, enough with that group. I'm going to go to Sprouts Farmers Market. Now, this is, you can consider this retail. Yeah, super mini market. Shop there often. Anyway, this one broke out of a base and is just trending higher. This looks like a trend trader like me, a stock that I would be interested in. It's got, tepid sales growth, nice earnings growth though, 1.2 up down volume. Sprouts, not bad, making new highs. That's why I put it in there, making new highs. We like Sprouts. ANET, another one, pulled back. Oh, I know why. This one, when the Nasdaq pulled back, it didn't make a new low. It came back to its 50 here and now has recaptured it. So that's a nice little undercut and rally above. I like ANET right here. SMCI, this is one that made a killing with earlier in the year, so I really hesitate to go back and try to make more money out of it. But this broke above a downtrend line here. And if I was on the ball, I would have had this on my ready list this morning. A nice 4.6% move today. And the only thing is it's below its 50, so we've seen a lot of stocks trade below the 50 and then rally back through. So, you could play this two ways. You could buy it, as it breaks above the downtrend line, or you could wait till it trades above the 50. Let's get okay, it's just forming a base here. It looks like that's the bottom. And so you could wait for that 287.73 as well. Let it prove itself a little bit, or the 298, so it's just really forming a base here after a massive move. But anyway, I like that move above a break above its downtrend line. SMCI looks good. CrowdStrike, another one I like. It's just in this stage 1 base. It's having trouble emerging from this base. I'm thinking if the Nasdaq improves in the next week or so, if we get a follow-through day starting on Monday, possibly, maybe this one will break out. But it's just kind of hovering around that, the old highs, 162, 161. So it's got to break above that, 172 and start moving higher. They really, had a presentation, I believe, last week and raised all metrics. Really impressive growth that they're showing. But, sometimes these things take time. CrowdStrike is not a cheap stock. This is AKAM. This one looks good to me, but it just needs more time. Again, a short little base here. It says 28 days. If you look at it on the weekly, that just looks, 5 weeks. 5 weeks is not, it needs more time. I do like this pullback, on lighter volume to the moving average. Maybe it'll come down here to the 21, but AKAM looks good and should be on the radar. What's the other one? Oh, Duolingo. This one had the double bottom pattern. Pretty, easy to spot this one. Made the lower low there. It went from 132, then ramped up and then traded down to 121, and now has made this double bottom pattern. As it pulled back to the 50, it found support and now is bouncing higher. The standard buy point is 162. I'd get in there before that. I haven't. I shouldn't say that I should. I haven't done that. I haven't bought this stock, but I do like the pattern. And if the Nasdaq's going to cooperate, this one's going to do well. Anyway, that's it for me today, except for one more thing in honor of the great Steve Jobs. I've got to go to Nike, which reported after the bell today. They reported a pretty strong earnings beat. The revenues were a little light, but their margins are getting a little better, and I think they're working through their inventory issues, and things are probably looking up for Nike. As you can see, this thing's hitting like rock bottom here. a lot of the retail stocks have. They're just getting beaten up, because of the media is talking about the incoming recession. And yeah, the consumer's probably going to slow down, although there hasn't been a lot of evidence of that. But the stocks move ahead of the actual, event, right? So probably when the consumer hits its low, this thing will be, back up and ready to break out when the consumer turns around, hopefully in 2024. Anyway, I just wanted to point that out. Nike up nearly 3% now in after hours action after reporting a strong quarter. That's it for me today. Like I said, the Nasdaq, I'm going to go back to the Nasdaq. Today was day 2 of an attempted rally. We wait 4 days because the first 3 days is typically short covering. And so we want to see the institutions come in and support the market here. So the first possible day would be day 4, which would be Monday. On Friday, we get the PCE, the inflation data, which could cause some volatility in the markets tomorrow. But, that's just one data point, and don't want to be making decisions on one data point. We're going to wait till next week. We're going to get a follow-through day. You got to think positive, right? And then we're going to have a lot of stock breaking out, showing leadership. Anyway, you got to think positive, be positive, and never give up.